Yeah, we're super excited. Have you guys ever been?
No.
Oh man, it's not too late to book that trip for next weekend. Yeah. So I was there once. It's been like 10 years though, just for the weekend. And man, you guys probably hear me talk about it a lot, but I just it's one of my favorite places. I just loved it. So we're gonna spend like a month out there, maybe a little bit longer.
Nice.
Yeah, fun. Yeah, Kyoto is definitely on my list. Sharif.
So we'll get started here in just a few minutes, guys. Just waiting for everyone late to get in here. Just waiting for everyone late to get in here. For the people watching on YouTube, I tried to make my charts a little bit bigger, but the problem is it kind of stretches it out. So it kind of has like a little bit of a stretchy look. So this is kind of the best I was able to stretch it out without losing without losing how it kind of looks, honestly. So it's better. It's either going to be, this stretched out look, or it's going to be more so the original look that we're used to.
I feel like this looks a little bit better. Like you could see more screen, more chart.
Yeah, the problem is that my charts itself are actually smaller. So that's the main problem is like the charts itself are smaller because I have a vertical screen. So
Ah,
that's kind of what the issue is here. But I think that this should be enough. Excuse me.
yeah, I mean, looks clear to me. Looks pretty clear to me. So yeah, yeah, looks good.
So we'll probably give it another minute and then we'll get started here, guys. Morning, good morning. Good morning, good morning, good morning.
Philip, JP.
All right, so let's get started here, guys. Just want to do a quick audio check. Can you guys all hear me all right? Do you guys hear me all right? Just checking. Yes, yes, yes. Okay, cool. So good morning, everyone. Welcome back to live trading. If this is your first time on live trading, welcome. We use the webinars channel in Slack to communicate. We're trying something new where we're streaming the first 30 minutes of live trading on YouTube, kind of talking about building the plan, talking about the overall market, talking about psychology, and then Stephen will come on and answer any additional questions. And then at 9:30 a.m., we cut off the stream and reserve that for MIC members only. This is kind of just to give you guys a taste of what we've been doing for the last 2 years. And yeah, that's pretty much it. So a lot of people have been saying that the charts on the YouTube stream are a little bit small. The reason why is because I have vertical monitors and my charts itself are small. And by making the charts bigger, it kind of screws up my screen real estate. So I tried to stretch it out a little bit, and this is the most stretch I was able to get on YouTube without compromising the quality of the actual charts. So please just bear with me. The most important thing is kind of understanding the psychology behind everything. So let's get started here. So where the hell are we? So the overall markets, let's talk about. So yesterday we got a pretty sure it was yesterday, we got a pretty good PPI number, right? Producer price index or whatever the hell it was, right? This is kind of just another CPI inflation type of number. But the market ended up selling off, right? So the thing to understand is for the market to bottom, right? For the market to bottom, the index needs to break over the previous day's highs and hold, right? So an example, the S&P 500, for it to bottom out, it needs to hold over the previous day's highs. So yesterday's highs are around 559, call it 560. So the S&P 500 needs to at least close above the previous day's highs to at least form a bottom. Now, when you have this big type of down move like this, the bottom isn't going to be created overnight. It may take days, it may take weeks, it may take months for the bottom to start forming. And when the bottom does form, that is your opportunity to start buying a lot of these names long term. So last year, I made a pretty decent amount of money buying long-term stocks on the dip and just holding them essentially for the long term. The reason why I don't really talk about those type of investments is because it's not for the faint of heart. It takes time to work out. It takes 3 months, 6 months, a year to work out sometimes. So a lot of people are in it for the quick money, and that's not really how it works. I mean, the perfect example is this Tesla. So Tesla, I have about a 275 average overall on my long-term position, which obviously is down, 10%. But when this stock was at 500 and it hits 200, 275 is not really bad. My plan is not a week. My plan is not a month. My plan is not even 3 months. My plan is 6 months at least to hold this and see what happens, right? So you have other stocks like Apple that got absolutely destroyed. You have stocks like Microsoft that got absolutely destroyed. You have stocks like Google that got absolutely destroyed. So if you are a long-term investor, these are the times that you want to start pouring into the market for the long term, because Warren Buffett said it best. He said, be greedy when others are fearful and fearful when others are greedy. Right now, this is pretty much the most panic we've seen since the pandemic times, right? So for me, when I start to see all this panic happening, all this and that, I gotta just go back to the basics, right? The basics tell me this. Long term, the market has outperformed. And if you don't like these individual stocks, guys, I think the best thing to do is just buy the S&P 500 and the NASDAQ, the SPY and the QQQ. So I'm not an investment advisor, so I can't recommend specific things for you guys. Do it at your own risk. But for me, I think the lowest risk investments are the S&P 500 and NASDAQ. And when we have the indexes like the S&P 500 down, 10% in a month, that could be at least a small place to start putting at least a little bit of capital to work, right? So overall, long term, I think that this is kind of just shaking people out, because the thing that you have to understand about the markets is the markets hate uncertainty. The markets hate the unknown. And with Trump saying tariffs one day, tariffs not another day, 50% one day, 200% another day, the markets are extraordinarily uncertain. So it may take a couple weeks, it may take a couple months for the markets to kind of stabilize and start brushing off this tariff news. The moment that you could tell that the markets have truly bottomed is when the same news like tariffs, instead of pushing the market down, it just keeps the market sideways, right? So that's something you guys have to understand, the overall big picture of the market. Yes, we are bearish right now. The overall market's down, but what does that mean for the stocks that we trade? So the small cap stocks that we trade are not correlated to the overall market, which means if the market's going up, the market's going down, that doesn't stop these small cap stocks from going crazy. For example, look at GV today. GV is going straight up today, right? The overall markets, they're up a little bit today, but the overall big picture is that they're kind of weak. Okay, but then you have this stock like GV's, it's up 50%, right? So the thing that you have to understand, guys, is these small cap markets do not correlate to the large cap cycle. So the niche that we have, the niche that we trade with these small cap stocks is very, very valuable to us, because the billionaires and trillionaires and all these hedge fund guys, they don't care about stocks like GV. It's too small time for them. They care more about the Nvidias, the Amazons, the Googles, because they could make billions and billions of dollars on that. They could only make millions of dollars on stocks like GV. So it's not really worth their time. But for us normal people, I'd be happy making a couple $1 million every single time, right? So you have to understand what type of pond we are in. The big Wall Street fish, the big Wall Street whales, do not care about the small cap market. It's too small time for them. But for us, I mean, chef's kiss. It's exactly what we need. So that's number one, is the overall market. I think that is slowly starting a bottoming move. You know, we tried to push under the previous day's lows yesterday and reclaimed and gapped up. So 550 held as support. And so long as we close over 560 on the S&P 500, we may start to have a little bit of bottoming action there. So that's that. Now, let's talk about trading. So trading so far this month has been dead slow for me. I'm up $20,000 this month with no red days yet. Fingers crossed, no red days yet. And the reason why I would say it's a lot smaller than the past month, which was 182,000, is because there's been a lack of opportunities. I've sized down my trading because the market's been a little bit choppy, right? So I reserve my size for the absolute best setups only. I size up only when the opportunity is there. And if you've been trading in March, it's been a lot of random and a lot of chop. So there's been times that I trade stocks and it ends up going lower without me. There are times that I, trade these stocks and they end up zombieing without me. So needless to say, it's been a little bit more of a choppy month, so I don't want to put my hard-earned money on the risk with all this choppy action out there. I would rather just kind of save my capital and save my money for the best setups only. So overall, keeping in with that same mindset is size down, take it slow, wait for the big opportunities, and size up. And if there are no big opportunities in front of us, I'm going to remain small, take the money, and run away. It's Friday. I want to walk away early today. Even with this $20,000 on the month, it averages out to about $2,500 a day. So that's pretty good, especially considering a slow week and slow month. So yeah, let's get into building the watch list. So the way that we build the watch list is very, very simple. We always look at the previous day's watch list from there and go from there. So let's start with SNOA. SNOA, no volume yesterday, didn't really do anything. Moving on. GV, this stock has a history of trapping. The difference is today SSR is on, the short sale restriction is on, and it's reg show, meaning pretty hard to borrow. So I would probably ignore this GV because it may set up for a major short squeeze. If it breaks over those March 12th highs, which it's already doing right now, this may end up squeezing. So GV, this stock has not died yet. It is above the March 12th highs. SSR is on, and it's pretty much the main stock moving today. So chances are it will squeeze and trap. So I am most likely ignoring the short. TRNR, no volume, no range, ignoring. CRVO. So CRVO yesterday kind of ended up pulling back. I never really got an entry on it because it never really bounced. If we do get a pretty big bounce towards this $6.60, $7, and probably about 740s area, I'll look to short. So CRVO never gave me a bounce yesterday to short into. Looking for a bounce for 660, 740s to short. FEMY, low volume, pulled back. CSCI, low volume. MYNZ, low volume, low range. CERO, low volume, low range. So those are all the stocks that were moving yesterday. Now let's talk about what stocks are moving today. So there's RGC. So RGC ended up doing a pretty big trappy move yesterday. Looks like it squeezed everyone out into the after hours. It tried to push pre-market towards 14 and ended up rejecting. This one's a little bit 50-50 for me. Kind of seems like it may trap, it may not trap. It has wide range. So on something like RGC, I'll kind of just be waiting for more information. RGC, day 2 stock, so far tried to bounce toward 14 and failed. This may end up getting some money flow and attention. So waiting for more information after the open to make a plan. What else is there? There's BAOS, BAOS looking for a bounce toward 250, 280, 3 to short. What else there? BON, you guys see this BON, guys? Went $11 pre-market. BON, an insane short squeeze pre-market. Stock went to 11. Nuts. I think a pop towards 3 should be pretty good to short, but let's see what happens. I mean, I think 3. The problem is there's so much range here, guys. So I will watch for a major bounce toward 3 to short. Very risky, so we'll use small size. And that's about it. So right now, guys, oh, and there's LFWD. LFWD, this was from yesterday as well, I'm pretty sure. I ended up, I think, is this the one that I traded yesterday? I can't remember. I think I traded this yesterday. I ended up just kind of collapsing. So yeah, I traded and then the Alex indicator went off and the Steven indicator went off and it just ended up collapsing. So if we get a nice bounce towards $2 today, I think that might be pretty good. $2, 220-ish, and 250. So LFWD, 220, 245 lines to short. And that's it. So the main runner of the day, guys, is GV. GV does seem like it's going to be major trouble. SSR is on. You know, there's not really any other stocks moving today. So I think that a lot of the attention and a lot of the money flow is going to go into this GV today. So yeah, it's going to be very interesting to see what ends up happening here. But overall, guys, that's pretty much the watch list. So what I like to do is I like to narrow it down to the top, 3 to 5 setups that I think have the most opportunities. I don't need to be trading every single stock of the day. I don't need to be nailing every single trade. All I need to do is just patiently wait for my stocks to come to me. So the way that we structure live trading is I build the watch list, I talk about the overall market, I bring on Steven, and then at 9:30 a.m. is when I actually start to execute my trades, which is reserved for the MIC members only. So what I'm going to do here is I'm going to pass it over to Steven, and I will let Steven continue from here. So Steven, the floor is yours, man.
Sounds good. Cool. So what we've been doing is, doing this 5 or 10 minute segment. I try to come up with topics. We kind of talk about it. What I want to start doing is, as we get lower on topics, I want to just kind of do a Q&A. I also think it might be kind of fun if we could review some of your guys' trades from the previous days. So that might be kind of a fun time. A lot of this is like, what did Alex trade? What did Steve trade, right? But we also want to help you guys trade, So during these short segments that I have, this time that I have, if you guys have any questions, feel free to post after my topic, or we could just jump into it. I'll get to the questions, and I think it'll be fun. I don't know. We'll give it a try. But feel free to post any of your charts from the previous day or days. And if you guys want to talk about it, have any questions, we could kind of do like a, kind of small chart and kind of go over it. There's always some good lessons on there, others can learn from it. So I think it'll be kind of fun. We can give it a shot. So today, I want to talk about something specific. I want to talk about managing your risk and stop placement. I'm going to try to get through these. Feel free to chime in if you guys have any other points or any thoughts on it or any questions. And once I get through it, I'll read through it, your questions, and I'll try to answer them. So every trade you enter should have a full plan in place, complete with your risk amount, your entry area, your hard market stop, and your covers. If you need any help with this, with proper planning, get active in the discipline workshop. Your stop should be set at an area where, if hit, your trade idea is no longer valid. Okay, that's an important one. For me, now this example is because I'm short bias, right? So this is an example is a short. That could be, usually it is, above a previous top, a death candle, or a resistance area. And I always like to have a little bit of wiggle room so my stops aren't too tight. Otherwise, we end up getting stopped out easily, which brings me to my next point. If you're often getting stopped out, only to see your trade ideas work, consider giving your trades more room. You can start scaling later or higher. This is also a short example. Reverse is true if you're long, or you can size down and scale wider. I usually recommend the latter, and I'll get into the reason for that. Tight stops that usually get hit often usually mean you're sized in too much. Less is often more. So whenever, and it used to happen to me when I was newer, right? So I know it happens to a lot of you guys. I get a lot of DMs on this. It's also super frustrating. It's when, you know, your stop gets hit, then you see the trade absolutely crush exactly the way you thought it should. So I would just say that usually what happens when that, I mean, it's gonna happen once in a while no matter what, right? But if it's happening too often, then usually sizing down and widening your stops helps. Or I should say, or you could do both, or you could do one or the other. You could start scaling later, short example, when it's higher. And you can also give it a little more room, whatever works for you. Like I said, I always have some wiggle room, but I find a good area to risk off of with, I don't know, it depends on the range of the stock. Could be 10 cents above, something like that. And I usually put my stop there. Jumping back in a trade can be kind of risky if your trade idea continues to be invalid, meaning the ticker is going against you. Then there's usually not any reason to jump back into the trade. If the trade has a big rejection, comes back down, sometimes, you know, that might be a good opportunity, but with time, you guys will start to realize when it is and when it isn't. Sometimes I like to size in a little bit smaller on the second go around just to make sure that everything's okay, and I'm not going to get emotional if I take a couple losses. Last one, and this is the example that I drew here. If you add to a winner, consider lowering your overall stop or making the ads a separate trade with its own risk area, okay? So here's a trade I took, I think it was Monday, I think it was Tuesday, SNOA. So if you look at this trade, this is actually 3 different trades, right? So the first trade, it dipped and it popped. I was risking, trade 1 is risk area 1. I was risking that previous top. So I had a stop like right above, you know, wiggle room, right? Right above 4.5. I don't remember, it was like 4.54, something like that. So I was scaling in. I think I got to, you know, 20-25% size. Obviously worked out well. Alex and I both identified this 4.2 area. Once that broke, I went into trade 2. I put another 20% on, something like that. And what I did here is I considered this a separate trade. So had 4.2 reclaimed, I would have taken that trade 2, those ads off right away, right? Then I would have been back down to 20-25%. I would have been comfortable scaling back to risk area 1. Hope this is making sense. Feel free to ask questions, and once I get through this, I'll go over it. So then we get down to the risk area 3. This is kind of interesting. This is why I wanted to share this example, because you can see, it's a little hard to see there, but risk area, my 393 line that I identified was the previous low. It broke, so I, after covering about half, I re-added. Then that area reclaimed. So what I did is I took it off right away. So essentially, this trade 3 was basically risk-free, a couple cents, right? It wasn't working out at that time, so I took it off. What ended up happening is that then it slammed down. So I put it back on plus more. Then we stayed under risk area 3, then I covered out. So this is kind of an example, I think, that might make a lot of sense on the last part that I was explaining in this example, which is, sometimes you could consider the ads a separate trade. Or again, I could lower my overall risk to each risk level if I wanted. It just depends on you and your style and what you're comfortable with. So hope that makes sense. I feel like this is a good example of that. And let me try to get to some of these questions. Henry says, hi, Steve, how do you put a hard stop loss in fast during the battle? Great question. There's a lot of ways to do it. I know Alex just pops them on really quick because he's really quick. He's been doing this a while. Personally, I don't really recommend if you're newer using hot buttons or hotkeys, but I use hot buttons. So I've got like 3 of them, and whatever my position is, or I could enter it manually. I pop it above on a certain level, then I manually move it on my chart. So I'm able to put them on pretty quick like that. But you're right, it could be a little bit challenging, but after a while, getting used to it, you get pretty quick at it. Yeah, I'm gonna try to wrap these up in about a minute. Flash, size of resistance, short versus size when you enter breaking support, how different are they? So I would say size at first resistance, short versus size when you're in breaking support. So what I do, Flash, is I usually try to enter 20 to 30% max on my first entries. That's when I'm not sure before the trade confirmed. The next ones, I usually try to add another 20 to 30%. So I try to usually put on about double, 100% add. Then if I get to the next one, it would be, depending on how confident I am in the trade, it could be another 10 or 20%.
Cool.
Okay, so we've got about a minute left. I want to wrap this up.
Thanks, Steve.
Hopefully that was helpful. Feel free to DM me if you guys have anything else.
Thanks, Steve. So we're going to wrap up the YouTube live stream here, and we're going to begin live trading for MIC members. So if you have any more questions, feel free to email us. Steven's email is stevenrh1@myinvestingclub.com. And keep in mind, guys, that the live trading aspect of the stream is reserved for MIC members. So have a great day, and let's get to trading, guys.